There's a moment in every trader's life when the question quietly changes from will I ever make it, to wait, am I finally getting this right? I remember the first time I felt that shift, not because my account suddenly exploded upward, but because my decisions started to feel different. My entries were calmer. My exits were cleaner. My losses hurt less, but somehow taught more. I wasn't chasing every green candle anymore. I wasn't refreshing my P&L every 10 seconds like it was an ECG monitor. If you've ever had that strange feeling, where you're still not rich, but you're not the same gambler you used to be, this video is the mirror you've been waiting for. And I want you to engage with that honestly. Comment below, right now, do you feel more like a developing trader or someone who is genuinely on the edge of becoming profitable? Be real with yourself, because here's the truth, no one rings a bell the day you start becoming a profitable trader. There's no notification, no badge, no pop-up on your broker screen that says, "Congrats, you've unlocked Tier 2 discipline." What actually happens is far more subtle. Your mindset mutates, the chaos in your head starts to quiet down. In this documentary-style breakdown, I want to walk you through 5 signs, deep, psychological markers, that Jesse Livermore himself would recognize as proofs that a trader is finally growing up. These aren't things like you made X% last month or your last trade was a winner. Those are surface metrics. I'm talking about changes in how you think about risk, reward, patience, and pain. Livermore understood something that most traders still resist. The market doesn't reward intelligence, it rewards emotional transformation. He blew up. He came back. He made fortunes and lost fortunes. But through all of that, he kept circling around the same realization. The real game isn't calling tops and bottoms, it's learning to stay sane, stay selective, and stay consistent while everyone else is getting emotionally shredded. In this video, I'm going to anchor each of the 5 signs to a piece of Livermore's philosophy. Why trading for clarity instead of excitement is the first real graduation. How your relationship with losses reveals whether you're still gambling or actually trading. Why trusting your plan through uncertainty is more important than having the perfect plan. How shifting from prediction thinking to probability thinking quietly changes everything. And the rare moment when you finally find calm where others panic, and what that says about your evolution. This isn't a hype reel. I'm not here to tell you that you're one mindset hack away from millions. I'm here to talk to you like a trader who's been through the grind, who's watched both my own psychology and countless others either bend or break. And I want to set one expectation clearly. These 5 signs are not about perfection. Even Livermore himself never reached a state of flawless discipline. They're about direction. If your mindset is drifting toward these behaviors, you're moving out of the crowd of hopeful spectators and into the thinner air where professional thinking lives. By the end of this series of sections, I want you not just to recognize these signs, but to audit yourself against them. To say, I have this one, I'm halfway to that one, or I'm still failing hard here, and I need to face it. Because the truth is simple and harsh. You don't suddenly become a profitable trader one morning. You grow into it, one internal shift at a time. In the next section, we're going to dive into the first big paradox at the heart of this journey, how the very things that attracted you to trading, the excitement, the action, the possibility of quick money, are the same things you must slowly kill off inside yourself if you want consistent profitability. It's the war between who you were when you started, and who you have to become to stay in this game. There's a brutal paradox at the heart of trading that almost nobody tells you on day one. The very impulses that pulled you into the market are the exact ones that will keep you from ever becoming profitable. When I first came into this game, let me be honest, I didn't come for probability distributions or risk-adjusted returns. I came for feeling. I came for the rush of being right, the drama of big green candles, the fantasy of flipping a small account into a big one. Whether you admit it or not, you probably did too. And here's where the inner conflict begins. To become a profitable trader, you eventually have to turn against your original self. You have to kill off the version of you that fell in love with trading for excitement, and rebuild a version that trades for clarity. That's the first big sign of transformation. When you sit down at your desk and, instead of asking, "What can I trade today?" you start asking, "Is there anything worth trading at all?" Let me ask you this, and answer honestly in the comments. Comment below. When you open your platform, are you usually hoping to find a trade, or are you calmly open to the possibility that today there might be nothing to do? That question exposes the paradox, because on one side is the emotional tourist in you, the part that wants to participate, to be in the action, to feel like a real trader by always having something on. On the other side is the professional you're trying to become, the part that knows your edge only exists in very specific situations, and that cash is a legitimate position, not a punishment. Jesse Livermore lived in this conflict long before we had candlestick charts and social media pings. He knew the pull of action. He wrote openly about taking trades just because he was in the habit of trading, not because the tape demanded it. And he paid for it. Over and over. His evolution, the one that turned him from bucket shop gambler into serious operator, wasn't a magical aha moment. It was a war of subtraction. He slowly removed the need to always be involved. He learned to sit out entire markets that weren't behaving right. He turned away from excitement and toward evidence. And that's the paradox modern traders still refuse to swallow. The more you need the market to entertain you, the less it will pay you. Think about your own journey. How often are you scanning charts, not to confirm a thesis, but to find something to do? How often do you hop into a setup that's good enough because being flat feels worse than taking a mediocre trade? How often do you justify overtrading as learning, when really you're just feeding your emotional need to feel active? Profitable traders still feel the itch of action, but they've learned to sit with it, to let it burn out without reacting. That's why this second section is called the inner conflict. It's not you versus the market. It's you versus your own craving for stimulation. Livermore's turning point came when he accepted that his job was not to create opportunity, but to recognize it, and that in most moments, genuine opportunity simply wasn't there. He had to become the kind of person who could say, "Nothing today," close the pad, and walk away. That quiet discipline was a bigger breakthrough than any single winning trade. So if you're starting to notice that you feel slightly uneasy when you don't trade, but you're also starting to resist that urge and only act when the setup is clean, that's not weakness. That's evolution. That's a sign. In the next section, we're going to dig into the core psychological trap that keeps most traders stuck on the wrong side of profitability, the way your brain gets conditioned by near misses, fast wins, and painful losses to make the worst possible decisions at exactly the wrong times. Understanding that trap is key to seeing the first real sign that you're breaking out of it. There's a cruel trick the market plays on almost every new trader. It teaches you the exact opposite lessons you need to learn, and it uses your own emotions to do it. Think about your first phase in trading. You take a terrible trade, no plan, no risk defined, pure impulse, and somehow, it works. You size too big, you chase the candle, you buy the top of a parabolic move, and instead of punishing you, the market rewards you with fast profit. Your brain quietly records, "See? That wasn't so bad. You're built for this." Then, later, you take a careful trade. You wait for the setup, you define your stop, you stick to your size. You do everything right, and the market slaps you straight to your stop. Clean loss. Again, your brain records, so being disciplined equals pain. Being reckless equals reward. Got it? This is the psychological trap, random reinforcement. You're not just losing or winning money, your nervous system is being wired in the worst possible way. Every emotional spike and crash starts bending your behavior away from what works and toward what feels good short term. Before you know it, you start cutting winners too early because you don't want the screen to turn red. You let losers run because it'll come back, it always bounces. You revenge trade after a loss just to fix the emotional wound, not the account. You're no longer trading your strategy, you're trading your feelings. Let me ask you something, and answer it honestly in the comments. Comment below, when you take a loss, what hurts more, the money, or the feeling that you were wrong? That single answer will tell you a lot about whether you're still stuck inside this trap. Because here's the core problem. As long as your ego is in charge, every loss is a personal attack, not a data point. And if every loss feels like an attack, how can it ever teach you anything? You'll defend yourself, you'll justify. You'll blame the broker, the news, the spread, the market makers, the algos, anything other than your own process. Jesse Livermore knew this trap intimately. He wasn't some flawless trading machine, he was human, and painfully aware of it. He wrote about his own fool plays, the times he broke his rules, doubled down in the wrong place, or stayed in dead positions because his ego refused to accept the tape's verdict. He understood something we hate to admit. The market is a terrible short-term teacher but an excellent long-term judge. In the short term, it sends completely mixed signals. Bad behavior gets paid sometimes. Good behavior gets punished sometimes. But over hundreds of trades, one pattern emerges very clearly: people who keep trading for emotional relief get wiped out. People who slowly shift toward trading for information and clarity survive long enough to build consistency. And that brings us to one of the first real signs you're becoming a profitable trader: your internal response to losses begins to change. You still feel them. You're still human. But something subtle shifts. Instead of immediately wanting to get it back, you want to understand what happened. Instead of obsessing over the outcome, you start checking the process. Did I follow my rules? Was the thesis valid? Instead of saying, "The market screwed me," you ask, "What is the market trying to tell me about my edge?" That's the moment when losses stop being pure pain and start becoming feedback. They're still uncomfortable, but they're no longer humiliations you must erase right away. They're notes, data, signals. Livermore reached that point only after suffering enough to realize that the alternative, chasing emotional comfort, was fatal. He began to treat each loss as tuition paid for a better understanding of himself and the tape. A loss that came from following his rules? Acceptable. A loss that came from breaking them? Unacceptable, regardless of size. Most traders invert that. They're okay with rule-breaking wins and devastated by rule-following losses. Profitable traders flip it. That flip is a huge psychological milestone. So if you're noticing lately that you journal your trades instead of just your P&L, you can take a loss without immediately clicking into another trade. You feel more bothered by breaking your rules than by losing money on a valid setup. Then you're not just trying harder. You're escaping the core trap. You're building a new association in your brain. Discipline equals safety. Impulse equals danger. In the next section, we're going to zoom in fully on Livermore's perspective, how he mentally separated himself from his trades, how he framed wins and losses, and how that framing maps directly onto the next key sign that you're finally crossing the invisible line towards sustained profitability. If I had to compress Jesse Livermore's entire trading philosophy into one sentence, it would be this: the market is never wrong, opinions often are. When I really let that line sink in, something uncomfortable happens. I realize how much of my early trading was nothing but a fight against reality. I wasn't trading the market, I was trading my opinion of the market. I wanted to be right more than I wanted to be aligned. Livermore's genius wasn't that he predicted prices. It was that he slowly, painfully learned to stop personalizing them. He looked at the tape the way a surgeon looks at a monitor, cold, focused, detached. He knew that every tick, every swing, every trend was just information. Not a compliment when he was right. Not an insult when he was wrong. Just the market speaking its language. Let me ask you directly, and be honest with yourself. Comment below: when a trade goes against you, do you feel like the market is attacking you, or simply telling you that your read was off? That single shift in interpretation is one of the clearest signs you're evolving. Livermore used to say that a trader must become almost inhuman about his own trades, not in the sense of being emotionless, but in refusing to let ego sit in the driver's seat. When he entered a position, he didn't think, "I must be right." He thought, "Let's see if the market agrees." And if the tape disagreed, he didn't argue. He exited. That's where his perspective locks directly into the signs of a profitable trader. Sign 1. You stop trading for excitement and start trading for clarity. Livermore didn't hunt thrill, he hunted confirmation. He wanted the market to prove his idea, not just flirt with it. Sign 2. You stop letting losses control your emotions. For him, a loss taken according to plan wasn't a failure, it was part of the cost of doing business. What shattered him emotionally wasn't losing money, it was breaking his own rules. Sign 3. You begin to trust your plan through uncertainty. Livermore knew that even a good setup could fail. His confidence didn't come from any single trade, it came from seeing his method produce results over many campaigns. That's why he could sit through normal volatility without tearing up the trade. Sign 4. You think in probabilities, not predictions. He never said, "This stock will go up." He said, "This stock has the character of a winner, and if it proves itself at the pivotal point, I will back it. If it fails, I step aside." That's probability thinking in action. Sign 5. You find calm where others panic. Livermore's greatest trades were often built in moments when the crowd was losing its mind, crashes, panics, sharp corrections. While others were emotionally hijacked, he watched behavior: which stocks refused to die, which ones snapped back first, which names the smart money quietly accumulated. That calm didn't come from being fearless, it came from having a lens through which to interpret chaos. The more I study his perspective, the more I realize something. Livermore didn't just trade markets, he traded behavior at scale, his own behavior included. That's what you start to do when you're on the path to profitability. You stop asking, was this trade good or bad, and start asking, was this decision-making process aligned with what actually works? You become less obsessed with being right on this trade and more obsessed with being structurally right over many trades. That's pure Livermore. And here's the part that quietly marks your growth. When you read a line like, "The market is never wrong, opinions often are," and instead of feeling attacked, you feel relieved. Relieved that it's not personal. Relieved that you don't have to defend your ego every time a candle prints against you. Relieved that your job is simple: frame a thesis, test it in the market's courtroom, accept the verdict. In other words, you stop seeing the tape as a judge of your worth and start seeing it as a partner in truth. That's the mindset Livermore used to filter out noise, both external and internal. In the next section, I want to bring this philosophy down from the abstract and into a single, vivid story, one trading moment where these signs of profitability all collided: fear, discipline, doubt, patience, and that quiet realization: wait. I'm not the same trader I used to be. There was one trade, one ordinary-looking setup on an ordinary day, where I realized, almost in shock, I'm not trading like my old self anymore. It didn't feel epic while it was happening. There was no huge gap, no market crash, no viral ticker. It was just a mid-cap stock quietly forming a base while the rest of the market buzzed around louder names. But inside my head, everything was different, and that's why this moment matters. Let me walk you through it, step by step, because inside this one trade, all 5 signs of becoming a profitable trader started to show themselves. The day began like many others. I scanned my watch list, saw a few names moving, some news-related pops, a couple of meme-ish spikes. The younger version of me would have jumped straight into something fast, just to feel alive in the market. But that morning, I caught myself doing something else. I looked at the noisy movers, and just let them go. No FOMO. No, I'm missing it. Instead, my attention kept coming back to one stock I'd been tracking for days. Let's call it TRX. TRX wasn't sexy. No huge hype. But it had something different. It had refused to break down during a recent market dip. It was grinding sideways near its highs, building a tight range. Volume was steady, not explosive, like someone was patiently accumulating. Old me would have said, too slow. Boring. I want something that moves. New me thought, this is clarity. This is what I'm supposed to be trading. That was sign number 1 in action. I was trading for clarity, not excitement. I marked the key level, a clear line where price had bumped its head multiple times. That was my pivotal point. Above that line, my thesis was, smart money is ready to push this higher. Below it? Just another range-bound nothing. The breakout came late morning. TRX pushed through the level with a strong candle and a noticeable pop in volume. I didn't hesitate. I entered, small but intentional, with a stop just below the breakout. And then, of course, the market did what it loves to do: it tested me. Within 20 to 30 minutes, TRX pulled back toward my level. Not violently, not collapsing, just drifting down. Old me would have started spiraling. Great, here comes another fake out. Why does this always happen to me? Maybe I should just close before it hits my stop. But this time, something was different. I watched the pullback and realized I wasn't panicking. I was observing. I checked. Was volume heavy on the pullback? No. It was lighter. Did price flush under my level aggressively? No. It tagged the zone, then stabilized. Was the overall market falling apart? No. It was just normal intraday chop. I felt the discomfort, but I didn't let it control me. I thought, if my stop hits, that's the cost of doing business. The setup was valid. Let the plan play out. That was sign number 2, losses, potential or real, weren't controlling my emotions the way they used to. TRX hovered near the breakout level for a bit, then slowly started turning back up. My heart rate stayed steady. Not because I'm some emotionless robot, but because I was trusting my plan through uncertainty. Sign number 3. I wasn't obsessing over whether this one trade had to work. I was thinking in probabilities: valid setup, clean level, healthy behavior on the pullback. If this one failed, another would come. It wasn't personal. It was just one roll of a loaded dice in a long series. That's sign number 4, thinking in probabilities, not predictions. I didn't need to be right, I needed to execute right. Then the moment that really hit me. Around midday, the broader market started wobbling. Index futures dipped. Social feeds turned sour. Is this the top? Here comes the rug, the usual chorus. I watched people around me emotionally flinch. Some bailed out of perfectly fine positions just because the color on the screen shifted from green to red for a few minutes. TRX dipped, a little. Then it did something beautiful. It snapped back faster than the market. Where other stocks were dripping lower, TRX was stabilizing and grinding back toward the highs. Instead of panicking, I felt calm. Almost curious. Interesting. This thing doesn't want to die. That calm in the face of potential panic wasn't coming from bravado. It came from seeing my thesis still intact, leader behavior, controlled pullbacks, buyers defending the level. That was sign number 5, finding calm where others panic, because you're anchored in behavior, not emotion. By the close, TRX was firmly above my entry, holding strong. It wasn't some face-melting moonshot yet. But I realized, sitting there, that regardless of how big the win became, I had traded like a different person. I chose clarity over excitement. I refused to let temporary drawdown hijack me. I trusted the plan even when it didn't feel great. I framed everything in probabilities. I stayed calm while the crowd got jittery. That's when it hit me, profit or not, this is what becoming a profitable trader actually looks like, from the inside. Comment below, if you were in that TRX trade, with price pulling back to your level while the market wobbled, what would you have done? Bailed early, moved your stop, or trusted the plan? In the next section, though, we need to talk about the other side of this journey, the emotional low points. Because not every clean setup holds. Not every disciplined trade feels rewarding in the moment. And sometimes, right after you finally start doing things right, the market hits you with a sequence that makes you question everything again. That's where the real turning point happens. Nobody tells you this part. Sometimes, the moment you finally start doing everything right, the market still drags you through hell. There's a cruel test that seems to show up right after you begin to grow as a trader. You tighten up your rules. You cut the noise. You stop gambling. You bring your best self to the screen, and then, like clockwork, you walk into a stretch where nothing works. Clean setups fail. Good reads don't follow through. You're not blowing up, but you're bleeding. I went through a period like that not long after the TRX trade I told you about. I remember thinking, I'm different now. I see things better. I'm calmer. And that was true. But the market doesn't reward you for realizing that, not immediately. It tests whether you really mean it. For about 2 weeks, I executed well, and the market paid me with a slow grind of small losses and scratch trades. No giant disasters. No horror story margin calls. Just that frustrating, grinding sensation of doing the work and seeing nothing to show for it. If you've been there, you know the inner dialogue. What's the point of this discipline if I'm not making money? I was making more when I traded like a maniac. Maybe I'm overfiltering and missing the real moves. Let me ask you straight. Comment below, have you ever started following stricter rules, and then immediately hit a losing or flat streak that made you want to throw those rules out the window? That's the emotional low point I want to talk about, the moment when good behavior and bad outcomes collide. During that stretch, my charts looked fine. My entries made sense. My risk was controlled. But trade after trade would either trigger and stop, or trigger, move a bit, then stall and fade. The old me would have flipped the table, abandoned the plan, doubled size, chased whatever was moving just to force the market to respect me again. The new me, honestly, I was tempted. Hard. I'd stare at a random runner on my screen and hear that little voice. If you weren't so strict, you'd be in that one. Just take something with momentum, man. Enough of this waiting. This is where Jesse Livermore's story came back to save me from myself. Livermore went through entire market cycles where his methods simply didn't sync with the tape. The trend wasn't clean. The leaders were muddy. The big swings he lived for weren't there. In those times, he didn't optimize by lowering his standards. He did the opposite. He reduced his size, traded less, and sometimes stood aside completely. He learned, after paying dearly, that there is something worse than a cold market, A cold market plus a trader who breaks his rules out of frustration. I remember one particular day in that rough stretch. I'd taken 2 small, valid losses in the morning, nothing catastrophic. Then a third setup appeared. It checked most of my boxes, but not all. The volume was questionable. The broader market was choppy. Something felt off. My plan said, skip it. Too marginal. My ego screamed, you need this win. For a full minute, I hovered over the buy button, literally feeling the tug-of-war inside my chest. That's when I realized, this was the real exam. Not the trade. This moment. Was I going to revert to the old version of me, overtrading to patch emotional bruises? Or was I going to act like the trader I claimed I wanted to be? I passed the test that day. I didn't take the trade. I walked away from the screen for an hour. When I came back, I saw that the setup I had almost forced had completely collapsed. It would have been my biggest loss of the week. Did that feel like a huge win? Honestly, no. I didn't feel triumphant. I felt tired, drained, annoyed. But underneath all that, there was a quiet realization. The old me would have been wrecked today. The new me is just slightly bruised and still in control. That's the turning point hidden inside the emotional low, when you're more proud of sticking to your rules than you are obsessed with making back your losses today. When you start measuring progress not only in dollars, but in decisions you didn't sabotage. When surviving a cold stretch with your process intact feels like a bigger achievement than hitting one lucky home run. Livermore's greatest progress didn't come from his biggest winning trades, it came from the periods he survived his own impulses. He understood that being a profitable trader doesn't mean you always win, it means you don't destroy yourself when you're not winning. If you're in that kind of stretch right now, disciplined but stuck, doing the right things but not seeing immediate payoff, listen carefully, that's not proof that your transformation is failing. It's proof that it's being tested. In the next section, we're going to crystallize this into a breakthrough, the specific rule and mindset shift Livermore lived by that turns all of this, losses, cold streaks, discipline, doubt, into a coherent path toward profitability. It's the rule that separates traders who visit good habits from those who live in them. If I had to circle one rule in red ink and write this is when you start becoming a profitable trader, it would be this: you stop judging yourself by single trades, and start judging yourself by your obedience to your own rules. For most traders, the scoreboard is simple. Green equals good. Red equals bad. That's how we're wired from childhood, results first, process later. But Jesse Livermore's life is a monument to why that logic is deadly in markets. He had gigantic winning trades that made headlines, and he still managed to blow up more than once. Why? Because even when the results were spectacular, his relationship to his rules was unstable. He himself admitted it. The times he suffered most weren't when the market moved against a valid position, it was when he broke his own code. Let me ask you something brutal and honest. What hurts you more right now, a losing trade you followed your plan on, or a winning trade deep down was just luck and rule breaking? If the loss still hurts more than the dirty win, you're not fully on the other side yet. Livermore's breakthrough wasn't discovering some magic pattern, it was realizing that his future as a trader depended on protecting his process more than his ego. And that leads us to a crucial shift, a sign you're finally becoming profitable in a sustainable way. Start to think like this. If I took a valid trade and lost, I won. If I broke my rules and won, I lost. That sounds insane to someone stuck in the old mindset. But to someone on the path, it makes perfect sense. Because you start to see what Livermore saw. The market's short-term rewards are often traps. The process is the only thing that compounds. He boiled it down to a few core principles. One, only trade when your conditions are met. No forced action. No, I haven't traded today. I need to do something. For Livermore, the tape had to present a very specific picture before he moved. If it didn't, he did nothing. That's a sign of maturity. Your default state becomes inaction until the market truly calls you in. 2, cut when your thesis is invalidated, without debate. He had what we'd now call if-then structures. If price fails at the pivotal point, I'm out. No second chances. Not because he hated being wrong, but because once the tape disagreed, the trade no longer matched his premise. Staying in was no longer trading, it was hoping. 3, press when the market confirms you, not before. Many traders go all in on the first entry, then get scared and cut winners short. Livermore inverted that. He started with a test position, then increased risk as the market kept proving him right. That's not gambler thinking, that's operator thinking, for never let one trade dictate your identity. His greatest strength, when he honored it, was refusing to see any single campaign as make or break. His identity was anchored to his method, not to this week's P&L. When you internalize these ideas, something quiet but powerful shifts. You no longer wake up thinking, I have to make money today. You wake up thinking, I have to behave like the trader I'm trying to become today. And here's the strange part, once you truly commit to that, the money often starts to follow, not explosively at first, but steadily. Your account stops looking like a roller coaster and starts looking like a staircase. Some steps are small, some are flat, some even dip slightly, but the overall shape tilts upward. That staircase isn't built from big wins. It's built from hundreds of small, boring, correct decisions, piled on top of each other. Exactly the kind of decisions Livermore was talking about when he obsessed over following his own rules more than outsmarting the market. So when you notice that you're more upset by a day where you broke discipline than by a day where you followed your plan and still lost, that's not you getting soft. That's you stepping into the mindset of someone who might actually last in this business. In the next section, we're going to drag all of this into the chaos of modern markets, algos, social media, dopamine apps, zero DTE options, and look at how these 5 signs show up in today's environment. Because if Livermore could sit in front of your screen right now, he'd recognize the same traps, and the same signals that you're finally, genuinely becoming a profitable trader. If Jesse Livermore sat down in front of your multi-screen, broker app, Twitter feed, Discord alerts, and crypto watch list, he wouldn't say, this is a different game. He'd say, same game. More noise. When I look at modern markets through his lens, I don't see a new universe, I see the same psychological battlefield with higher resolution. The tools changed. The emotions didn't. And that's why these 5 signs of becoming a profitable trader matter more now than ever. Let's anchor them in our world, your world, right now. Every time you open your phone and see screenshots of someone's plus 300% option trade, a millionaire at 22 story on TikTok, a Discord ping shouting by now rocket rocket rocket, you're being pulled back toward the trader you used to be. The one who needed the market to feel exciting to feel alive. But if you're on the path Livermore walked, you start to notice something different in yourself. You scroll past hype and think, cool for them, not my setup. That's sign number 1 in the modern world. You trade for clarity, not content. You stop needing every day to be YouTube thumbnail level dramatic. You don't chase whatever's trending just so you can say you were there. You're okay with watching 20 charts and trading none. That's not laziness. That's alignment. Now look at sign number 2, you stop letting losses control your emotions. In today's market, a loss isn't just a red number. It's a comparison trigger. You lose on a disciplined trade, then open social media and see nothing but people winning. It's easy to feel like the universe is personally mocking you. But when you're evolving, your response shifts from, why does this always happen to me? To, okay. Was the setup valid? Did I execute my plan? You close your app. You don't seek emotional comfort by entering another trade just to feel better. That's huge. That's you refusing to let the market hijack your nervous system. Sign number 3, trusting your plan through uncertainty, is even harder now because we live in a world of instant feedback. Every tiny move has a notification, every dip has an opinion, every candle has a name. You're long a valid setup, then suddenly, some influencer tweets the opposite view. The news runs a scary headline. Volatility spikes for 15 minutes. Old you would slam flat because too many people are bearish or the vibe changed. New you asks, has anything in my actual setup broken? Has price hit my invalidation? Or is this just noise? If nothing in your structure has changed, you allow discomfort without immediate reaction. That's Livermore's mindset, adapted to an era with 1000x more distraction. Then there's sign number 4, thinking in probabilities, not predictions. Modern traders are constantly pressured to call it. Bull or bear market? Crash coming or new all-time highs? This stock to the moon or to zero? Every thumbnail, every tweet, every room wants a bold prediction. Binary. Absolute. But the profitable trader inside you starts to respond differently. Instead of saying, this will definitely crash, you say, given this structure and behavior, there's a decent probability of downside. I'll position accordingly, define risk, and let the tape confirm or deny. You stop needing to be the one who was right first and start trying to be the one who aligned best. And finally, sign number 5, finding calm where others panic, shows up every time there's a sharp move. A big red day. A sudden gap. A flash crash in a single name. The crowd reacts emotionally. They dump everything at the bottom. They hedge only after the move already happened. Or they YOLO short because this is the big crash, right at the point of maximum fear. You, on the other hand, are doing something that looks almost boring. You're checking if your stops or levels have been hit. You're watching which names show relative strength in the chaos. You're noting which setups are breaking and which are quietly being created by the panic. You still feel fear. You still feel uncertainty. But your actions are guided more by structure than by adrenaline. Let me ask you directly. Comment below, in the last big spike or sell-off you experienced, did you behave more like the crowd, or more like the observer? Did you react, or did you respond? That answer is your real-time diagnostic. If Livermore lived today, he wouldn't be obsessed with the latest indicator or AI model. He'd use whatever tools helped him see behavior more clearly, and ignore everything that only increased emotional noise. He'd probably have fewer watch lists, fewer alerts, fewer social feeds. But he'd run deeper conviction in the moments that counted. And that's what these 5 signs really are in the modern context. A shift from input overload to focused observation. A shift from P&L obsession to process obsession. A shift from needing to feel like a trader every day, to being okay with feeling like a trader only when the market truly requires one. The platforms may be new. The leverage may be higher. The speed may be insane. But the path to becoming a profitable trader still runs through the same narrow gate, your ability to manage yourself. In the next section, I want to make this brutally practical. We're going to turn these 5 signs into a step-by-step implementation checklist, something you can literally use to audit your daily behavior and ask, am I actually walking this path, or just liking videos about it? You don't become a profitable trader by inspiration, you become one by installation, installing better behaviors into your daily routine until they become who you are. Up to this point, we've talked about signs and psychology. Now I want to hand you something more concrete, a daily and weekly checklist you can actually run, to turn these 5 signs from ideas into habits. Think of this as your Livermore mindset protocol, not perfect, not sacred, but a working template you can adapt. Puzzle piece step 1, start your day with identity, not charts. Before I open a single platform, I ask myself one question. Am I here today to feel like a trader, or to behave like a professional? It sounds simple, but it forces a shift. I'm not allowed to open charts until I say, out loud if I have to. Today I trade for clarity, not excitement. You can write that at the top of your notebook, sticky note on your monitor, whatever. But it must be conscious. That's how you reinforce sign number 1 every single morning. Test tube step 2, pre-filter your universe. Next, I narrow the world. Instead of scanning everything, I do this. 1. Create a small universe list, 10 to 30 names max, of strong trends, clear levels, behaviors I understand. 2. For each name, I answer. Is there a clear A+ setup forming? Or is this just moving and I want action? If there's no clear thesis, it doesn't go on my permission to trade list. By the time I'm done, I have a big universe for watching. A very small universe for potential trading. If I catch myself scrolling beyond that small list just because I'm bored, that's my red flag that I'm slipping back to the old self. Fire extinguisher step 3, predefine your emotional rules around loss. This part is huge. Before the first trade, I decide how I will interpret losses today. I literally write. If I take a loss within my plan, I will log it and move on. No revenge trading. If I break my rules and win, I will treat that as a red alert, not a victory. Then I set a daily loss limit, not just in money, but in mental energy. Max number of trades, max number of losses before I'm done for the day. This is how you operationalize sign number 2. Losses don't get to hijack the day. Once limits are hit, the session is over, no debate. Compass step 4, convert your plan into if-then rules. To trust your plan through uncertainty, sign number 3, the plan must be crystal clear. Not poetic. Not vague. Mechanical. For each setup you take, you should be able to write, if price breaks above X with volume around Y then I enter with size Z. If price closes back below level X, then I exit, no questions. If trade moves in my favor by our multiples, then I trail stop/take partials according to this rule. If you can't write an if, then for a trade, you don't have a plan, you have a hope. And you can't trust hope under pressure. Game dice. Step 5. Force yourself to think in probabilities. Here's a simple practice that rewires sign number 4. Before any trade, I ask myself 2 questions and write the answers. What percentage of the time does this kind of setup work for me historically? Am I okay with this trade failing, as long as it matches my edge? If I can't accept the failure in advance, I'm not thinking in probabilities, I'm emotionally attached. That's my cue to size down or skip. I also stop using language like "this will moon" or "this can't fail." Instead, I force myself into phrases like, "There's a favorable risk-reward here. This is one of my better patterns, but it can still lose." Words matter. They reveal how you truly think. Tornado. Step 6. Create a panic protocol. To build sign number 5, finding calm in chaos, I create a protocol before volatility hits. When the market suddenly spikes or dumps, I run this checklist instead of reacting. 1. Check stops. Has my actual invalidation level been hit? Or am I just uncomfortable? 2. Check structure. Is this move breaking the structure of my setup? Or is it just noise inside my risk plan? 3. Check leaders. Which names are holding up better than the market? Which are collapsing faster? 4. Decide deliberately. Exit because plan says so, or hold because plan is still intact, or stand aside from new trades until dust settles. I'm not allowed to make any drastic changes until I've answered those 4 questions. That tiny pause is often the difference between acting like everyone else and acting like the trader you're becoming. Notebook. Step 7. End of day sign audit. At the end of the day, I don't just log P&L, I audit the 5 signs. I ask myself, and you can do the same. 1. Did I trade for clarity today, or for excitement? 2. Did any loss completely throw me off emotionally? 3. Did I trust my plan through uncertainty, or did I keep editing it mid-trade? 4. Did I think in probabilities, or did I speak and act in predictions? 5. In the most volatile moment today, did I panic, or did I run my protocol? Score yourself honestly from 1 to 5 on each. No one else has to see it. Watch how those scores drift over weeks, not days. That slow improvement is what becoming a profitable trader actually looks like. If you had to score yourself today on these 5 signs, what would your average be out of 10? Drop a number in the comments and be brutally honest. It's not about flexing, it's about tracking who you're becoming. These steps won't make you rich tomorrow. They're not supposed to. They're meant to shift the game away from random, emotional trading and towards structured, self-aware decision-making, the exact evolution Livermore fought for in his own career. In the final section, I want to take everything we've talked about, your struggles, Livermore's philosophy, these 5 signs, and this implementation, and wrap it into a cinematic conclusion, a closing message you can carry into every trading session, especially on the days when you doubt whether you're really changing at all. One day, without any big announcement, you're going to sit in front of your screen, place a trade, manage it, close it, and realize in the quiet afterward, I don't recognize the trader I used to be. Not because you're suddenly rich. Not because this one trade was spectacular. But because your reaction, your thinking, your pacing, your emotional balance, felt different. That's the real story behind becoming a profitable trader. It doesn't arrive like a rocket, it creeps in like a change of season. You only notice it when you look back and think, wait. I didn't panic there. I didn't chase that. I actually did what I said I'd do. Jesse Livermore lived in the extremes, massive losses, newspaper headlines. But beneath the drama, his journey was the same as yours, a long, brutal fight to replace instinct with insight, impulse with structure, emotion with observation. He learned, sometimes the hardest way possible, that the market is never wrong. His opinions were. His rules were his only real protection, not his intelligence, not his conviction. His biggest enemy wasn't the tape, it was himself. And whether you've been trading for 6 months or 6 years, that's the same enemy you've been facing. Let's zoom out and look at where you are right now, honestly. If you've watched this far, it's not by accident. You wouldn't sit through a long-form, psychological, Livermore-style breakdown if you were just here for lottery tickets and dopamine. Something in you already wants the slower, deeper path. Maybe you've already noticed sign number 1 in your own routine. You're less obsessed with having a trade and more focused on waiting for your trade. You skip noise. You accept boring days. You're starting to trade for clarity, not excitement. Maybe sign number 2 is showing up quietly. You still hate losses, but they don't trigger the same spiral. You can take a red trade, breathe, review it, and not immediately slam into revenge mode. You're still human, but you're not hostage to every tick. Maybe sign number 3 has surprised you a few times. You've had trades where, even when the market wobbled, you stayed with your plan instead of ripping it up mid-flight. You let the if, then you wrote before the emotion decide what to do during the emotion. Maybe sign number 4 is visible in your language. You hear yourself saying good odds, higher/R. This setup works for me about 60% of the time, instead of this has to work or this can't fail. And maybe, here and there, in a sharp sell-off or sudden spike, you've tasted sign number 5. You felt fear, but you acted from structure. You checked levels, not headlines. You watched behavior, not hysteria. You found a thin slice of calm right in the center of the storm. Those are not small shifts. Those are not soft, feel-good concepts. Those are the early cracks in the wall between you and the trader you're trying to become. Livermore's life is a warning and a guide at the same time. He shows you what's possible when you align with the tape, and what's dangerous when you drift back into ego. You don't need to copy his exact style. You don't need to trade his instruments. But you can inherit his seriousness about one thing. The greatest trade you'll ever make is the trade where you stop being your own worst counterparty. So here's my challenge to you, simple, but not easy. Before your next session, don't just tune your charts, tune your identity. Pick one of these 5 signs and make it your focus for the next week. Not all 5. Just one. Trade for clarity, not excitement. Refuse to let losses dictate your mood. Trust a clearly defined plan through discomfort. Speak and think in probabilities. Run a calm protocol when others panic. Comment below, which one of these are you going to consciously work on this week? Write it down publicly. Lock it in. Let this video be the line in the sand where you stopped just learning about trading psychology, and actually started training it. Because in the end, profitable trading isn't some mystical state reserved for the chosen few. It's the compounded result of thousands of tiny, unglamorous decisions to act like the trader you want to be, even on days when the market doesn't reward you for it. Stay patient, stay disciplined, and the next time you catch yourself sitting calmly in a moment that would have broken the old you, I want you to remember this. That calm? That control? That's profit already, whether your P&L shows it yet or not. And if you keep building from there, the numbers will come.